Okay guys, this video is going to be on determining your take-home money. So it gets really exciting when you realize you have a lot of equity in your house and then you want to sell it and cash out. So determining how much you actually get to keep of that equity is very, very important to you. So when you do sell your house, there are fees, and let me explain to you what those typical fees are. So fees that are paid on pretty much every transaction are your title insurance fees. You have your escrow fee that you usually split with the buyer, and you have like a recording fee to record the transaction with the county recorders. Now, those are typically paid each party pays their own portion of that. Keep in mind, it is negotiable. It's just, that's typical for the seller to pay those. Now, negotiable fees on top of that, or sometimes the buyer will ask for a seller credit to help them pay for their closing costs. That's negotiable. It depends on how many offers you get and how competitive people want to be with their offers when buying your house. They can also ask for other things like a home warranty. They can pretty much ask for anything. You can say no, you can say yes. It just depends on if the numbers look good to you and you make that decision. But here's where it gets important, guys. It's all about the difference between your gross profit and your net profit. You want to look at what we call in the biz your net. Yeah, it is just a fancy word, or to make it sound cool, it's just your net profits. But you need to know, what are net profits? Net profits are when you take the amount you got for the purchase of your house. Say you sold it for $100,000, and you subtract all your expenses. So you subtract the title fees, the home warranty, any seller credit, and the mortgage you still own on the property. After all fees are subtracted, the check you get and you get to take home, that's your net profits. That's your net. So don't get confused. Your gross profit is the total amount. So somebody buys your house for $100,000. That's your gross amount that you're getting for the property, but you haven't subtracted all your costs. So you don't get to keep all that money. You still have to pay the bills with that amount. So suffice to say, it's important to know your net, right? When you are talking to an investor or a real estate agent, you want to know what your take-home money is, how much you get to deposit into the bank, and they can give you an approximate amount. They can get pretty darn close to how much you're gonna probably make on the sale. So make sure you see a net sheet so you can know your net profits on how much you should get when you sell your house for a certain amount of money.